Good morning, traders. James Thorpe stepping in for Steve Miley for the Thursday, the 13th of October, Bull and Bear trade day meeting. I hope you're all well. So, I guess it's good morning to our traders in America, good afternoon to our European traders, and good evening to our traders further out east. It's good to be back. So, today it's going to be a short meeting because it's all about one thing and one thing only, and that is the CPI number coming up in about 1 hour, so 8:30 a.m. Eastern time. And I know that you're all keen to get focused and get ready for this meeting. The whole world, get focused for this number, and the whole world is looking at CPI to see, where it comes in, where it lands. And that's what the markets are going to be focusing in today. Good morning, Jason. Thanks for joining us. Right, just a quick summary from yesterday. We obviously had the Fed minutes. Just a quick summary from that. Many participants stressed the need to keep tightening, even though the labour market is slowing. Ongoing rate increases were appropriate, and the cost of doing too little action far outweighed the cost of doing too much when it came to fighting inflation. When a restrictive level of Fed funds are reached, general agreement that it was appropriate to maintain that level for some time, and a sizable portion of the economy has yet to show response to tightening. Inflation is unexpectedly high. Labour market tight, and inflation was declining more slowly than anticipated. So, really, nothing new out of the Fed minutes. It's what the market was expecting, and obviously there was very, very little reaction to it. Maybe a slight sort of sell-off later on in the day, but really the market, is a bang on what we expected out of the Fed, right? This is the message that they've been pushing now, and when the markets, were higher, they hadn't quite, I guess, anticipated the Fed's completely and utterly prioritizing inflation over economic growth or over jobs, and so it sold off on the back of it. But going into yesterday, the markets, we're sitting on our lows now for the year. The markets digested that strong hawkish message, and when it's repeated in the minutes, the market doesn't react. There was a few sort of like kind of slight dovish nods in there that may be worth mentioning, with a few Fed officials saying the Fed needs to calibrate the pace of tightening with the risk of an adverse effect on the economy, and it would be appropriate at some point to slow down the pace of increase. Now, that's just a few dissenting voices, perhaps, and it's not overly dovish, and it's a little contrary to the main core Fed message that, look, we're not really, I'm paraphrasing here, obviously, but we're not really focusing on the economy. What our number one priority is inflation. So kind of that sort of set the tone, or re-emphasized the Fed's message and set the tone for the market, following the Fed minutes, which is basically subdued trading. And of course, it's going to be subdued trading going into 8:30 today. And really, there isn't much else to talk about. We are seeing expectations of 2 basis points. So it's going to go from 8.3. The expectation or forecast is 8.1, and maybe a slight increase in the core. That's what we're looking at. That's what the rest of the world's looking at. And ain't nothing going to happen ahead of that. Let's have a look at some of the headlines. Excuse me, I grab a glass of water. Excuse me. Here's the Reuters headline: Futures jittery ahead of US CPI data. It's just what I repeated. I'm just repeating now what we've just gone over. Wall Street futures ticked higher on Thursday. Investors on the edge ahead of a closely watched US inflation report that could keep the Federal Reserve on the path of aggressive rate hikes. Now, just one thing on that. I think, like my opinion, it's harder, obviously, really to sort of say what's going to happen. But the headline figure is to see softening of 20 basis points, as we mentioned, to 8.1, with the core likely to climb to around sort of 6.5. But even a number outside these expectations probably won't move the Fed from hiking 75 basis points in November. You got to think about it like this. Inflation is sticky, it's laggy, it's not very immediately reactive. So the Fed's come up with a plan to try and curb inflation. And if we get a softer number today, it will be good, it will be positive for the markets. It won't mean necessarily that the Fed will deviate from its path of tightening by 75 basis points in November. What it might mean is that the target Fed funds rate comes down, but we won't know that until the Fed start talking about it. So a softer number, will be obviously good for the market. I think the number's going to come in around these levels, and I think I don't know what the market's going to do. It's really, really difficult. I don't want to make any predictions, but we'll see. Let's have a look at Forex Live. The same thing, you go through the headlines. There's nothing really of any sort of benefit here for us in deciding what the momentum is going to be on the day in the markets. It is all down to the eyes on US inflation data. So the kind of like, I'm going to wrap up the meeting almost. I mean, I think it's like 6 minutes for me. It's an all-time record. We normally go on for about 30 minutes, but kind of that is where we are today. I mean, I can't emphasize enough how important this data is. It is the most important data of the month in the United States, but the global markets, the global central bankers are all looking at it too, right? Because we know what they want to know, is global inflation, is it still climbing? Is it pausing? Is it softening? And they can start to formulate their own monetary policies around that as well. As well, obviously looking at their own data and what's happening in their own economies. But the market, the global markets are like a spider's web, if you like. If you imagine a spider's web, if you pull one corner of the web, the rest of the web moves. And that's what it's like in global markets. Everything's very interconnected. Everybody's watching the CPI data today. I'll have a quick run through the charts, but there's not really much to say again because whatever technical setups are happening here or look like they're happening in the charts could be completely negated on the back of a move in the inflation data today. But you can see we're kind of sitting towards the lows here. This is the daily S&P chart, and on the hourly, we've been sort of been consolidating now for some time ahead of this number. If we get a rally today, the first sort of level of resistance that we want to look out for. Let's put this in here. There's a couple of levels here. But these are hourly levels, and I don't think really if we get a significant start to get a softer number and a significant move to the upside, I wouldn't be using these as levels of resistance to sell. I'll be looking to get in long, because that's going to set the tone for the rest of the day. But you should be aware of where these are. If we get like a very neutral number and the market just sort of jitters around a little bit, it'll be you should know where these kind of like levels are. So these are your first sort of line levels of resistance, with this downward trend sort of being your first major level of resistance. In the Nasdaq, it's a very similar sort of situation. We've been sort of consolidating ahead of this number. There's the same similar sort of downtrend. We're quite a way away from where we are, but there's no reason to suggest we won't get up there today if we get a soft number. And it's the same. I'm really rushing through these charts quickly, guys, because there isn't really much to say. As I said, I don't want to talk about setups on charts and levels of support and resistance and give you guys false hope about these levels of support and resistance being significant, because it's all fundamentally driven today, not technically driven. And then we have the oil charts here. You see oil is sort of consolidating at the moment in this sort of range. This was OPEC here. There was an expectation that they were going to cut production by 1 million barrels a day, and actually announced 2 million barrels. So this just goes to show you how a change in the fundamentals can set tone on price. and this kind of drove price up one, two, three, four, almost about sort of 10 days in a row. So the fundamentals are just so important in the markets at the moment. And then, sorry, that was I haven't got a gold daily. This is the gold hourly, right? So sitting in the range there in gold. So that's it. I'm going to wrap it up, in terms of like the outlook for the day and the recap. The recap is a Fed minutes summary that, is completely and utterly in line with what we were expecting. And, and it had very little impact on the market, which suggests now that the market's digested that message. And, if the Feds come out as being hawkish, it's likely not to result in a sell off from here. And what we're looking for is if the Feds come out being dovish, then that's going to cause a significant rally, and all eyes to the CPI with a 20 basis point fall in expectation in forecast, but a slight growth in expectation in core CPI. One thing I just want to wrap up on, a couple of things actually, thoughts for the day. I did mention that this book, Best Loser Wins, Tom Hugard, is something I'm reading and really enjoying. I've recommended it a couple of times, and a few traders have given me some feedback on how much they've really, really enjoyed it. I think it's a really good book on trading and trading psychology. Um, and I, highly recommend it. But one of the traders I recommended it to reached out to me, Ben. Big shout out to you, thank you, and recommended it to me. Recommended his YouTube channel to me, and I wasn't really aware that he had a YouTube. I knew that he was on YouTube, but I didn't realize how much content he had out there. And actually, went on YouTube yesterday and watched this one, the scalping the US opening minutes, a 16-minute video. Yeah, 16-minute, 43-second video, and really enjoyed it. And I thought, his book is very much in line with how he talks, and I'm looking forward to sort of subscribing to this channel and can I subscribe now? Probably not signed in, and watching his content. And what I didn't realize was Tom's content actually, he has a lot. Let me pause this. He has a lot of good content. He has a lot of content to get through. I think he's a great trader. I mean, well, that's without a doubt. Obviously, his trading track record is verified. I know people who know him. He's got a great reputation. He's a great trader without a doubt. But what I really like about Tom is the way he talks is very, very direct, and the way he thinks it's very direct, and it's very much in line with how I think about the market, and I really like, I really relate to his content. And it's, when I teach trading and when I do mentoring, it's very much along the same lines. So if you guys have an opportunity, and buy the book, and if not, at least go over to YouTube and check out Trader Tom, Tom Hugard's channel, and tell me what you think. I'd really like your feedback. Was it useful? Did you get something out of it? Incidentally, we plan to do a resources page on the site where Steve and I will curate, if you like, sort of the best books, the best websites, and maybe the best YouTube channels that we really like, because obviously there is an awful lot of garbage out on the net, and an awful lot of snake oil salesmen in the trading industry trying to sell you garbage, or sign up for their chat rooms and things like that, and like a lot of it is rubbish. But there are some really good people out there doing really good stuff, that have a lot of credibility in the trading space. And what we want to do is we want to curate all that and put it into a resources page, inside the Trade Day members area. So, at least just give you an insight or a guide to, like, look, we think these are good resources on the net. Go check them out and see if you can get something out of them. So that's it. The last thing I just want to mention very quickly, before the data comes up in 46 minutes, is that do not go into this position, into this number with an open position. I've just started to see a little bit of gambling creeping into the trading. We don't mandate that traders need to be flat ahead of economic releases like some proprietary trading groups do. We believe in empowering the trader to make their own decisions, But I want to emphasize what a terrible idea it is to go into a big number with an open position. I know, I get it. It is very, very tempting, right? All new traders get tempted by it. I was tempted by it as a strategy when I was, first getting going. And the idea is this. I get the idea. It's like, well, if CPI comes out one way, pretty aggressively one way, the market's going to move, and it's going to move hard and fast. So let's say I put a long position on 30 seconds before the number, and I put a stop, 10 ticks below where I'm long, with the view that if I'm right, I could make, a ton of money very, very quickly. And if I'm wrong, I'm only going to lose 10 ticks because I'm going to get stopped out. Right. That is just a terrible strategy that never works long term. Because first of all, you're gambling. And second of all, that strategy completely and utterly relies on that stop being filled at the price that you put it into the market. Now, just for very new traders that are listening, a stop order, when it's put into the market, doesn't necessarily mean it's going to get filled at that price. If you buy 25s and you put a stop in at 20, the market goes down. That stop is triggered when the first trade happens at 20. When the first trade happens at 20, your order then becomes a market order, and it gets filled at the next best available price. And what we see on big data releases is not only a lack of liquidity in the order book, meaning there's very few bids and offers, but we also see on the number itself market sweeps. And what's happening is that algorithmic trading systems operating in single digit microsecond speeds are analyzing the headlines and executing trades and positioning that trader's position accordingly. And if the market, let's say you bought 25s and put a stop in at 20, hoping that, if you're right, it's going to rally and you're going to get out at 15. If you're wrong, you're only going to lose 5 ticks. What happens is if you get it wrong, there might be a market sweep that the automated order says sell down to 10, which basically will take out all the bids down to 10. Your order will get triggered, but you're going to get filled after his order gets filled. So if he's offered at 10, sells everything down to 10, and he's offered at 10, you're going to get filled at the next best available price. And that's already 10 ticks away from where you're expecting to get filled. And that's why this strategy never works. You also sometimes see, frustratingly, you stop getting triggered just as the data comes out, only for the data to have been right, and you were long, you had a stop in at 20. As the data comes out, it gets triggered at 20 because there's so much volatility right there in those initial microseconds, and the market rallies 50 ticks, but you're not long anymore, you were stopped out. It just doesn't work over time. Don't trust me, it's a strategy that I tried when I was naive and lost money over time. And I've just seen numerous traders over the year trying to implement it as a trading strategy, and it does not work. It's pure and utter gambling. It's impossible to risk manage, and over time, I guarantee you will lose money. Now, I know not many people do it, right? I know a lot of our traders on Trade Day are smart enough. We actually cover it in our course on economic data releases and fundamental analysis in the free courses section. But I have started to see one or two people come onto the platform and do it. So if you're listening to this message, please don't. It's not going to work out for you in the long run. We're just trying to help you, become sustainable long-term traders. Okay, on that note, we're 20 minutes in. I'm going to leave it there. Thanks for your feedback, Jason. I can see in the chat, always stay flat during economic news releases for sure. You get it. Hopefully everybody else will. Have a great trading day. All eyes to the CPI in 41 minutes. It's going to set the tone for the rest of the week. Be careful out there. Be safe. Have a great trading day.